It's pretty amazing how sometimes these huge, world-changing technologies start from something really quite personal. Today's deep dive actually kicks off with a story like that from our author in Argentina back in
Oh
2013.
yeah, the Bloomberg reporter.
Exactly. She was living there, reporting, and dealing with some pretty intense economic instability. Runaway inflation, chewing through savings, and then suddenly the government just stops people buying U.S. dollars.
Wow, yeah. Imagine that. One day you can protect your money, the next, nope.
Right. That feeling, that sense of losing fundamental financial control, that was the spark. It sent her down the rabbit hole of crypto and eventually to the story we're digging into today,
Right.
the birth of Ethereum.
And it's a great starting point because that feeling, that desire for, more control for systems outside of traditional authorities, it really taps into a much bigger historical theme, doesn't it? It runs right through Ethereum's origins.
It really does. And that's what we're getting into today. Our mission here is to unpack the key motivations, the core ideas, and those really crucial early steps that took Ethereum from just like an idea in a white paper to a project aiming to reshape, well, maybe even the internet itself.
A big goal.
Huge. And we're leaning heavily on Camille Russo's book, The Infinite Machine. It's incredibly well-researched. She did over 100 interviews, dug through archives, spent time at crypto events. So this isn't just facts, it's the story of how this whole thing got started. Ready to jump in.
Let's do it. So the ideas behind Ethereum, they didn't just appear out of thin air. The groundwork was laid, really, decades before by the cypherpunk.
Ah, yes, the cypherpunks.
Since the 80s, these cryptographers were obsessed with creating private, peer-to-peer digital money. You had people like David Chaum and his eCash, a really early stab at anonymous digital payments.
And Timothy May's manifesto, right. That idea that tech could be this liberating force against central control.
Exactly. It wasn't just code, it was a philosophy. A belief that technology could empower individuals against, centralized power. And that philosophy is baked right into Ethereum.
It feels like it is, yeah, like it's part of the actual code's DNA. And it wasn't just cryptography influencing things either, was it? The whole open source software movement played a big part.
Oh, absolutely. That whole ethos. Remember the Richard Stallman story at MIT?
Yeah.
With the printer?
Yeah. He couldn't fix it because the code was locked down, proprietary.
Right. And that frustration, that idea, that knowledge, that code should be open and shared, that's completely fundamental to how blockchain and crypto communities operate.
Okay, so you have these philosophical roots, the open source mindset, and then Bitcoin arrives.
Bitcoin. 2008. Satoshi Nakamoto's white paper. That was the breakthrough. It solved that tricky double spending problem, how to stop digital money being copied and spent twice.
Using that decentralized peer-to-peer network.
Exactly. Time-stamping transactions, locking them into a chain with cryptography, proof of work. And the mining process, Satoshi even used the analogy of gold mining, computers solving puzzles to validate transactions, earning new coins, like miners digging up gold.
It solved the digital money problem brilliantly. But the key insight, maybe, was realizing that this underlying trustless system, it could do more.
Precisely. Bitcoin proved decentralized digital cash was possible. But almost immediately, people started thinking, okay, this blockchain tech, what else can we do?
And that's when you get those Bitcoin 2.0 projects popping up.
Yeah, early attempts to use blockchain for, well, all sorts of things beyond just money. Decentralized stock trading, property titles, digital ID.
Ambitious stuff.
Yeah.
But they struggled, didn't they?
They did. A lot of them tried to kind of bolt new features onto Bitcoin itself, which wasn't really designed for that level of complexity. And then the first big crypto price crash, the crypto winter, that really put a chill on things for a while.
But the believers, the core tech folks and libertarians in the forums, they kept tinkering.
They kept experimenting, yeah. Laying the groundwork for what came next.
Which brings us neatly to the specific idea of Ethereum, and of course, Vitalik Buterin.
Vitalik. Even back then, he apparently stood out. Super interested in computers from a young age, deep into the Bitcoin scene, and crucially, he could explain really complex stuff in a way people understood.
And his early venture, Bitcoin Magazine, with Mihai Alisi. That seems like a key step.
It really was. Kind of an unlikely pair. Mihai the entrepreneur, Vitalik the intense coder. They hadn't even met in person at first, but they launched the first print magazine just for Bitcoin.
Which became a hub for the community, right?
Yeah.
And a source for mainstream reporters trying to figure this all out.
Absolutely. And around the same time, you have Anthony Diorio getting involved.
Right. His background was more business, but the 2008 financial crisis really shook him up.
Yeah, it destroyed his faith in the traditional system. He saw it as fundamentally flawed, even called banks a legalized scam, according to his brother. He started looking for alternatives and found Bitcoin.
So you see this pattern emerging: people disillusioned with the old ways, looking for something new, something decentralized.
Exactly. And Mihai's project Agora, that decentralized marketplace idea, that fits right in, like an eBay, but using blockchain for escrow so you don't need to trust a central company.
A direct precursor to the kinds of applications Ethereum would enable.
Totally. And then Vitalik goes on this sort of worldwide Bitcoin tour.
This seems really important. This is where the Ethereum idea starts to crystallize for him.
Yeah, he's traveling, seeing all these different Bitcoin projects, and he realizes Bitcoin just isn't flexible enough. Its scripting language is too limited for the complex things people are starting to dream up.
And his own sort of libertarian leanings, influenced by his dad's experiences in Russia, probably pushed him towards wanting a more open system too.
No doubt. Then he spends time in Israel, and that's really pivotal. He's talking with the Mastercoin team, Ron Gross, J.R. Willett.
They're working on colored coins,
Yes.
right? Using Bitcoin to represent other assets.
Exactly. Vitalik saw the potential, but also the clumsiness of building on top of Bitcoin. He proposed a more general platform, something with real scripting power.
But the Mastercoin guys were hesitant, worried about security.
They had reservations, yeah. Making it too flexible could open up risks they weren't comfortable with on the existing Bitcoin base.
And that was the moment.
That seems to be it.
The walk back from the eToro office in Tel Aviv,
Yeah.
he decides basically, if they won't build it, I'll do it myself. The birth of the Ethereum concept right there.
Which leads straight to the Ethereum white paper. It's kind of amazing thinking about his background then. Born in Russia, family moved to Canada for stability, gifted programs, but feeling unchallenged.
All feeding into this moment, you imagine. And then he just sits down and writes this foundational document, apparently quite quickly, like in a couple of weeks of intense focus.
Just, wow. Quietly creating the blueprint for potentially a whole new internet layer. And the core idea in that paper was truly radical for the time. Ethereum as this all-purpose computational platform. Not just for one thing, like Namecoin for names or Mastercoin for new protocols, but a general base layer.
Generalization was the key.
Right.
Instead of building a new blockchain for every idea, build one flexible blockchain that could run any idea.
Exactly. And the heart of that flexibility was the concept of the contract.
Not a paper contract, but code.
Right. Code living on the blockchain that could automatically manage money, hold data, run itself when it received a transaction. That programmability was the game changer.
And he didn't just blast it out immediately, right? He shared it with a small circle first.
Yeah, a select group for feedback, people he trusted in the space.
And the feedback must have been interesting. What did people make of it initially?
Well, someone like Adam Krellenstein, Texture Online, he got it immediately. He saw it as this platform for all sorts of tokens and blockchain uses, powered by the Ethereum virtual machine, the EVM.
The EVM. That's the engine, right?
That's the engine. And crucially, it was designed to be Turing complete, which, in simple terms, means it could theoretically compute anything any other computer could compute. That unlocks immense possibilities for smart contracts.
And the way Ethereum handled accounts was different too, wasn't it, compared to Bitcoin?
Yes, a really important design choice. Ethereum used an account balance model, more like a bank account, rather than Bitcoin's UTXO model, which is more like managing digital cash.
Why the difference?
Vitalik felt the account model made it much easier to code complex applications, like the hedging contract example he gave in the paper. Simpler logic for developers building these smart contracts.
Okay, so the technical vision is getting clearer. And this is when Charles Hoskinson comes into the picture more formally.
Right. Charles had this math background, was interested in crypto education. He got some unexpected funding and was looking for a big project. He ended up partnering with Dan Larimer.
The founder of BitShares. They were already doing some pretty cutting-edge stuff.
Yeah, with their concept of distributed autonomous companies, or DACs. We mostly call them DAOs, now decentralized autonomous organizations.
Explain that again quickly. What's a DAO or DAC?
So Dan and his father Stan envisioned these as like computer-run companies. All the rules, the operations, everything encoded on the blockchain. Transparent, immutable, no need for traditional managers for lots of things.
Like automated escrow services or maybe even more complex organizations?
That was the vision. BitShares itself was aiming to be this whole ecosystem for communication, finance, everything, without central control points. Really ambitious.
So Charles, coming from that ambitious background, sees Vitalik's white paper.
And he's immediately impressed, sees it as truly groundbreaking. Around the same time, Gavin Wood, a computer scientist with a deep open source background, also finds the white paper.
And his reaction was different.
His immediate reaction was basically, okay, let's build this. He wanted to start coding right away.
Which brings us to that Miami Bitcoin conference. This seems like where the team really started to form.
It was a key moment, not some stuffy corporate thing, apparently. Just loads of enthusiasts, hackers, thinkers, all buzzing about the future of blockchain, brainstorming like crazy.
And while everyone's talking, Gavin Wood is coding.
He actually built a proof of concept, a bare bones version of Ethereum right there during the conference. Got it transferring some digital currency between nodes.
Incredible, just jumped right in.
Meanwhile, back in Amsterdam, another developer, Jeffrey Wilk, he was involved with Mastercoin too. He reads the paper, gets inspired, and also starts coding an Ethereum client independently.
Wow. That really shows how compelling the core idea was, that multiple people just started building it almost simultaneously.
Definitely. So the official announcement in Miami, it created a huge buzz. Vitalik's presentation hit the right notes, simplicity, the Lego brick idea, this foundational layer for building anything.
But not everyone was instantly convinced. Dan Larimer had questions.
Yeah, Dan raised important points about scalability. Could this thing actually handle lots of transactions? Valid concerns drawing from his BitShares experience, but the overall vibe was pure excitement.
And the team starts to coalesce. Mihai, obviously, but others too.
Yeah, people like Roxana, Taylor Goering, Matthijs Groenebeck, Stefan Toole, Lorenzo Patuzzo, a diverse group. Many met at a hackathon in Milan, and they were committed, ready to drop everything and move to Switzerland to make this happen.
And those early days in Switzerland sound pretty intense. Not exactly luxurious headquarters.
Not at all. Started in a sublet, then crammed into Herbert Sturchy's tiny apartment in Lucerne, literally sleeping shoulder to shoulder.
Wow.
Then the famous spaceship house in Zug.
Sounds like classic startup life, but maybe even more so.
Totally. Cramped quarters, but fueled by this massive vision. They set up routines, and apparently the conversations were constant brainstorming about identity on the blockchain, Internet of Things, disrupting banks. The sky was the limit.
Okay, so the vision is big, the team is forming, but then reality bites. They had to deal with the messy real world, right?
Yeah.
Especially regulations.
Absolutely. Vitalik and Gavin started doing these educational meetings with VCs in Silicon Valley, not really pitching for money yet, more like testing the waters, getting a sense of valuation.
But that caused some friction internally. Not everyone wanted to go the traditional VC route.
Yeah, some early members were wary of corporate influence, and there were growing doubts about Charles's leadership style, too. Plus, those hints he sometimes dropped about maybe being Satoshi Nakamoto, that didn't go down well.
Right, okay. And the biggest hurdle?
Yeah.
How do you actually fund this thing? The crowd sale.
The Ether sale. Huge legal questions. How do you do this legally, especially in Switzerland and the U.S.? They saw what happened with MaidSafe's chaotic sale and the SEC warnings that followed. They had to be careful.
So they got lawyers involved.
MME in Switzerland, that move basically helped kickstart Crypto Valley in Zug. But the U.S. was trickier. They brought in Steven Nurioff, who connected them with the big law firm Pryor Cashman.
And they talked to Joseph Grunfest, former SEC commissioner. What was his advice?
Crucial advice. Make Ether useful immediately. Give it utility on the platform. And maybe try to avoid the U.S. market directly because of the risk it gets labeled as security.
Which led to the whole utility token concept. Ether isn't an investment, it's fuel for the network.
That was the argument they started building, yeah. Lots of legal research went into that. But while they were navigating the legal stuff, the internal tensions around Charles were boiling over.
What happened there?
It came to a head in a meeting in Zug. The other core members basically decided he couldn't continue as CEO. He was effectively removed from that role.
Wow, major shakeup. And around the same time, Vitalik got the Thiel Fellowship.
Yeah, a huge boost. Not just the money, but the validation from a respected figure like Peter Thiel. Huge credibility gain.
And even before the sale, people were getting excited globally.
Definitely. Meetups were popping up all over the world organically. People were drawn to the idea. Ken Seif, an early potential investor, was already asking hard questions about how to price the tokens.
So the sale itself, they decided not to block U.S. buyers, despite the risks.
Right. Kind of reflects that open global vision Vitalik had. The sale launched July 22nd, 2014.
And how did it go initially?
Really well. Funds started pouring in quickly, huge relief for the team who'd been working intensely, often without pay, for months. They even had this cool real-time counter on the website showing the Bitcoin coming in.
What about the economics of Ether itself? How did that work?
It was different from Bitcoin's hard cap. Ether supply wasn't capped, but the rate of new Ether creation was designed to decrease over time, trying to balance incentives for network participation with avoiding runaway inflation.
Ken Sieff had that interesting analogy, right? Bitcoin as Series D, Ethereum as seed stage.
Yeah, basically saying Bitcoin was more established, maybe lower risk, lower potential reward at that point.
Hmm.
Ethereum was this super early, high risk, potentially sky high reward bet.
But the sale wasn't without controversy. Concerns about fairness.
There were definitely questions. Preston Byrne did an analysis suggesting the flow of Bitcoin into the sale looked suspiciously smooth, maybe automated, and later analysis by Chainalysis did show that a relatively small number of addresses held a large chunk of the initial Ether.
And the co-founders got a significant chunk too, the endowment. Did that raise eyebrows?
It did. Questions about incentives. Were they incentivized to buy more during the sale themselves? It's complex. But despite the questions, the sale succeeded. It raised the funds.
And people started actually using the results, building things.
Yeah, you had early adopters like Paul and Orel starting up mining operations. It was becoming real. Meanwhile, the devs in Amsterdam and Berlin were heads down, coding.
Building out the actual protocol, the test nets.
Exactly, working through the planned stages, Olympic, the first test net, then Frontier, Homestead, Metropolis, and looking ahead to Serenity and Proof of Stake.
And then finally, the launch.
July 30th, 2015, the first live version of the Ethereum network, Frontier, went live. A massive moment for everyone involved. All that coding, all that struggle, finally coming together.
Okay, so let's just quickly recap where we've been. We started with the cypherpunk ideals, the influence of Bitcoin, then Vitalik's key insight leading to the white paper.
Then the early team forming, the scrappy beginnings in Switzerland, navigating those incredibly tricky legal waters, and finally the Ether sale that actually funded the launch.
It's just wild to think how those chaotic, uncertain early days really did lay the foundation for this technology that's still evolving so fast and touching so many areas. Really gives you perspective on what it takes to build something genuinely new.
Absolutely. And reflecting on this history, you can't help but think about the sheer difficulty, right? Building something revolutionary, especially when the rules are still being written, legally and technically, the clashes of vision, the technical hurdles.
It really makes you wonder, what does this early story tell us about how innovation actually happens, how disruption unfolds? Definitely something to chew on as Ethereum continues to develop and make its mark.